All right, bet. I'm going to be explaining everything you need to read order flow on the footprint. And this is all I really use. It's way more powerful than the DOM. And I think the most powerful order flow tool you'll ever need. All right, so to start off, let's ignore, for the basics, for beginners who don't know how to read a footprint chart, let's ignore all these numbers. Ignore all of these. Okay. What we're going to start off now is explaining the candles. So these are normal candlesticks. They don't look like normal candlesticks. But right here, you see the red line, and we have blue lines. Red lines, blue lines. So these are actually, okay, these are actually our candlesticks. So this is our open, close. Since there's nothing here, this is our wick. So this is a bearish candle. Open, close, wick. Open, close, wick. Open, close, wick, wick. Okay. Now we're gonna read delta. So take your eyes to the bottom of the screen right here. Delta. So what this means is we have two things right here. We have on the top bars the total of number of contracts traded, and the bottom bar is our delta. So the delta is how many more traders were there. Were there more bearish traders or were there more bullish traders? Were there more sellers or more buyers? So in this candle, a total of 1,998 total contracts traded in this one minute candle. I'm on the 1 minute, by the way, on ES. On this one minute candle, total of 1,998. And there was 152 more sellers in this candle. Okay. So it's usually going to be a bullish delta for a bullish candle and bearish delta for a bearish candle, but not always though. For example, already right here we see one at 9:30. We have a bearish candle, but there's bullish delta. How could that be? Well, it's because bids could mean two things. When someone bids, it's either an aggressive seller or someone's bid limit getting filled, and vice versa. Someone's sell limit getting filled or an aggressive buyer. So these can just be sell limits be getting filled instead of aggressive buyers. Oh shit. Okay, so back to what I was talking about. And this could also mean when we have, this is what we call an inverse candle, where you have a bearish candle, but the delta is positive, and vice versa. This is what we call an inverse candle. Another way to see this is buyers are being absorbed. So that's a sign of absorption. All right, now I wanted to teach y'all more beginnership about trap traders, so trap buyers, trap sellers. It's honestly the most powerful confluence and the main confluence I use when looking at the footprint. So redirect your eyes right here to this right column with the blue and red numbers. Okay, so this is also delta. These numbers right here are all delta. The ones in red are bearish delta. The ones in blue are bullish delta. So what does a trap trader look like? Well, if we're looking for shorts, we'd want to see a bearish candle right here, and we want to see buyers stuck at the top, which is literally right here. 265, 78, 189. And me personally, I wait for at least 200 trapped for my entries. Okay, then for a bullish example, right here. Look at all these trapped at the wick. Price can't move any further down, rallies up. And why is this important? Because think about it like this. Say if you want to take longs here, Why trap sell is important? Well, for the sellers to exit their positions, what do they have to do? They have to buy back up. Okay. Oops. Okay. Another key confluence is exhaustion. I'll teach you an exhaustion and exhaustion print. So exhaustion is basically sellers or buyers, they're getting weaker at a level as they get closer to the level. So what I like to see is a 50% drop off. So don't really have an example, but I like to see it's always the last three. So for a bearish example, you want to be going on this right side. Now we're pay attention to the middle numbers now, to the right side. For a bearish example, you want to look at the right side, right? I want to see a 50% drop off from the last three. So 228 to 160, that's not 50% drop off, but 160 to 13%, that is way more than a 50% drop off. So that is bearish exhaustion. And for bullish exhaustion, we have a good example. Let me see. Right here. And now for bullish example, you want to look at the left side, 283 to 117 to 22. Okay? And then I'm going to go to a candlestick chart and try to like put everything together. And then also an exhaustion print. An exhaustion print is just the last number. Okay, so for a bearish example, you're looking at the right side at the top. For a bullish example, you're looking at the bottom left. Okay, so what a exhaustion print is the top or the bottom, right? And the number needs to be 9 or less. So the top tick or the bottom tick. So right here, this is an exhaustion print because it's 4. Extremely low contracts. Look at the drop off too, 287 to 4. Crazy drop off. It's a good sign of exhaustion. Where do we go? We shit the bed after. Right? And then for a bullish example, you'd want to find it. Look, we found it right here. An exhaustion print right here, 2. So it needs to be, remember, 9 or less, 9 contracts or less. So if you're bearish, you want to find it up here. Bullish, you want to find it down here. And then next thing, another confluence to go over is a 0 print. This is a continuation confluence. And I'm trying to see if I can find any. They're pretty hard to make. But basically what it is, it's a continuation confluence. It's for a bullish candle, you want to see a 0 in the middle. In any of the middle. It can't be in the top or the bottom, that doesn't count. It has to be anywhere in the middle where there's a 0 on the left side. That's called a 0 imprint. That's a sign of continuation and strong movement to that side. And then also, if price comes back to that level, it's a support and resistance level. So for bullish, on the left side, you see a 0 in the middle. For bearish, you see a 0 like this, but that doesn't count because it's in the bottom in the middle here. And that's a bearish. What was I just saying? 0 print. That's a 0 print. Okay. And let me show you how I use trap traders. I'm going to show you an example right now. So this is today's market open. There's no news Monday, so I didn't trade. But let's say you just trade ICT. I don't, but I have levels, right? So let's look at market open. 9:30 open here. High time frame for today was bullish. Okay, so our bias was bullish. Let's just say we're looking for longs. Okay, we're looking for longs, but we want to see trap traders, or we wait for a liquidity sweep. Right here, 9:32 liquidity sweep. Go back to this motive wave. 9:32 sweep. How many trap traders did we leave? Remember, I personally use 200 minimum. 112, 61, 57. That alone is enough. But then we add even more. Another 200 right here. Right? This goes to our next confluence. This is called a delta flip. All right. But in this case, this would be an inverse delta flip. So delta flip is strong movement to one side, and then we reverse to the other side. So here we get strong bearish movement, but the delta is bullish, and then we reverse. So usually this would be strong bearish delta. We want this to be strong bearish delta. And then the next candle, we want strong bullish delta, and I would enter based off that with also trap traders. So if I'm looking for longs, I want to see trap sellers at the bottom with a delta flip. Here's an inverse delta flip. That's an extra stronger confluence. So whenever it's an inverse candle, just know it's a stronger confluence than a normal. Okay. So yeah, say we're looking for longs at 932. Look at all these trap right here. Then 933, you're like, okay. You can honestly enter up 932, but wait for 933, wait for some more bullish delta and confirmation we're gonna move to the upside. And we get that. As longs right here. Oh, and there are all my levels right there. Okay. And yeah, that's basically everything you really need to know on every confluence. You need to know on the delta. Let me show you some examples of exhaustion, what it looks like on the candlestick chart. Let's look at 937. So 937, we get a huge sell-off right here. Look at this wick right here. Okay. You probably assume there's probably some trap sellers up here, right? They're trap buyers up here, and then we move down. I personally don't use exhaustion as a entry confluence, but it's just a cherry on top for myself. 937. So why order flow is so important, and you're ahead of the game. You don't have to wait for an IFEG for your entry. You get filled in right here. 937. 246 trap. Look at the drop off. 508 to 378 to 52. That's not 50% drop off. Almost is. This is definitely more than a 50% drop off. That is like a 700% drop off right here. Or no, they're like 350% drop off right here from 378 to 52. Good sign of exhaustion. With the trap traders, I would enter on this candle, 938. Me personally. If I had a level up here, obviously you got to use context. There's no level up here for me, so I would not take that. But if they had a level up here, I would have taken that. Let's look for some bullish. Okay, actually right here, twice. So look at this exhaustion: 241 to 144 to 9. Remember, that's an exhaustion print. So not only do we have exhaustion with the 3 candle, the 3 tick pattern, but we also have the exhaustion print, which is really strong in this candle as well. 50% drop off, and then we also have an exhaustion print when it's 9 or less. And that was right here in this candle. See right here? And then we reverse from there. Right? Trap traders, trapped, wait for price to move above, rally higher. Okay, and one more thing I forgot is imbalances. Almost forgot to mention imbalances. This is just like a cherry on top confluence for me, but these are also used as support and resistance levels. So right here highlighted, the blue, these are buy side imbalances. These red ones are sell side imbalances. So basically a strong confluence is a strong continuation confluence is if you see a bullish candle and a buy imbalance in the middle, that's a strong continuation confluence. And I usually like to mark these out as support and resistance levels, right? Okay, and for the bearish side, This is strong bearish confluence because sellers came in heavy at this high and price did not close above it, right? So strong bearish confluence would be, say this candle right here, we had a bearish imbalance where it showed a red number like this, and we had it in the middle and we closed below it. That's a strong continuation confluence. Now, what is a good confluence of a reversal? Is, for example, let me find out a good example. I'm not sure if we had one today. A strong example, not really like this. I mean, it is, but is you want to see a buy imbalance at the top. So a I forgot to mention, buy and sell imbalance is when it's 300% more than the sellers, okay? When they're 300% more stronger than the sellers, okay? Same thing for sell imbalance. So there's 300% more sellers in that area than buyers. So if you're looking for shorts, you want to see a buy imbalance at the top and then price close below it or just move lower after that. So we leave a huge amount of buyers at the top. Same thing for a sell imbalance. Let me see if we had one market open. Okay, well, this is a bullish confluence. Come lower, buy imbalance at the bottom, price closes above here. This is a bullish confluence. Use this as a support and resistance level as well. I always mark these out during market open as support and resistance levels. All right, so the gist of it is, if you're looking for shorts, you want to see this is a cherry on top confluence for me. So you don't have to use this, but this is just extra. But also, I always do keep in mind, these are strong support and resistance levels, okay? If you're looking for shorts, you want to see a buy imbalance or a sell imbalance at the top, preferably buy imbalance and price lead without it, meaning trap buyers. And if you're looking for longs, you would want to see a buy imbalance. Or no, you would want to be looking for a sell imbalance at the bottom and price lead without it. Strong indicator of trap sellers. All right, that's basically the gist of it. I think I explained everything that I should have gone over. If I didn't, let me know. If you have questions, let me know. Peace.